Check 1, 2.
Go! Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with Podcast 64. Man, just before long, we're going to be at 100, and 100 is going to be a great day. Today, we have 5 questions sent in by investors like yourself who had a question and wanted an answer. And if you have a question, send it to support@bsffacademy.com. One more time, support@bsffacademy.com. Question number 1, and it's a scenario question. When going through the seller script, the seller says a number I am not comfortable with to move on to part 2. I've asked all the reduction questions and their number is about market value. What should my response be? So here's the thing. And this, I can tell this is from a coaching student of mine because no one else would know we have a part 1 seller questionnaire and a part 2 seller questionnaire. So here's a questionnaire part 1. So we're going to ask, do you have a house you're open to sell? Yes, good. Is it listed with a real estate agent? No. Great. What do you think it's worth? $100,000. What do you want for it? $100,000. Is that the least you'll take? Yep. No. Or whatever it is. So can you see yourself doing better? Nope. Yep. Whatever it is. So that's the lowest you'll go? Yep. No. Whatever it is. They're not moving. So they end up right at that $100,000 they said earlier before. And they're not moving. They say something crazy like, well, I'm selling it for sale by owner so I can save all this money. Here's how you get rid of them. Because you are going to get rid of them, but you want to be nice about it because they are your prospect. Remember, we're going to contact them some more. We're going to call them at 15 days, 30 days, 60 days, 90 days. We're going to, over that time period, send them 3 more pieces of mail. So if they called you today and they weren't ready to and highly motivated to reduce the sales price, but maybe in 90 days they will, so we want them to call us back. So I'm going to invite them to call me back if they change their value and their opinion on how much they need. If their circumstances change, can you please call us back? And by the way, who do you know that's looking to sell a house in the area? You don't know anybody? Terrific. Well, if you did know somebody, remember we pay a $500 referral fee to all referrals we receive when we end up buying the house. Thanks so much for calling, and I'll talk to you soon. Question number 2. I know wholetailing isn't about rehabbing. However, when you buy houses, do you fix broken windows or doors or things like that that can be security issues or safety hazards? Well, wholetailing isn't about rehabbing. And gotta say, some people don't know what rehabbing is. They think rehabbing is remodeling. But there are times that you just absolutely have to be able to lock up a house. You know, if the front door's been kicked in, yeah, you got to put a new front door on it. Even though I hate saying it, I got to do that. If I have a broken window, someone can climb through it and start squatting on the house. I've got to make sure that doesn't happen. But here's the deal, folks. The majority of the time when I'm marketing the property, I'm not the one living in the house. I'm not the one responsible for it. Someone else is. Now, if it's vacant when I buy the house, my contract allows me to have exclusive, irrevocable rights to the occupancy of that property because when vacant, I want to start protecting my asset. So I'm going to make sure I board it up at least. I'm not going to fix anything because I'm not going to put a lot of money out until I own something. But I'll board it up, board those things up so someone can't get in, that kind of stuff. But if it's vacant, so again, I'm going to get exclusive, irrevocable occupancy rights. But again, most of the time, I'm listing that thing the next day on the MLS. I'm going through the procedure. I only own it for 5 or 6 days before I resell it because I'm finding my buyer while I'm paying off my seller, that kind of stuff. That's why it's so important to know your days on market. If everybody that's listening to this podcast, if you don't know your days on market in your area, shame on you. It's so easy to get. You just call the board of realtors, you call a real estate agent, you go, what's the days on market in this zip code? Oh, and it takes them all of like 2 minutes kind of stuff. But if you're a realtor, you have it. So, always got to know your days on market because that's what we have to assume when we write our contract. So if we have a 64-day on market average in a zip code, now I know my property is going to be a little bit less. So I know that 64 days is the maximum because they're going to look at my property in the as-is value price tag so much less than what's going out there in the ARV price tags. So mine's going to get noticed. They're going to look at mine first. So I know the 64 days is going to be a long time. So I just need to make sure my contract to purchase with the seller is less than 64. In fact, it could probably be 45 in a situation like that. So understand your days on market, coordinate all that stuff together. Great question. Question number 3. During the due diligence period for an appointment, I have had noticed that some comps are houses sold off the MLS, no agent. Do you ever use these comps to determine retail value? Could these be used to determine as-is value? Well, the comps that are used to determine as-is value are properties that are in the same condition of your subject property. So if a property sold for $15,000 and it looks just as crappy as the one that you're going to buy for whatever it is, well, you can tell yourself, well, it's the same kind of property. If your comparable cells have been fixed up and they have granite and they have, dual pane windows and all kinds of good stuff, and yours doesn't, well, it tells me yours is an as-is and those are ARV. So the determination of as-is and ARV is determined when you look at those 6 comparable cells. So your 3 on the markets and your 3 just sold. From an aspect of, do you look at FSBO cells or cells that don't go through the MLS? Absolutely. But you have to be conscientious of the buyer of those properties, because if a lot of your properties that are not on the MLS are bought with Corps or LLCs, because I'm going to buy them Corp or LLC if I'm buying, and that's going to tell me that that's probably an investor, so I'm going to really scrutinize why they paid what they paid. But if it's a John Doe selling to a Jim Doe, I'm going to scrutinize that one too, because it's probably a relative interspouse, or they're not selling at full value. I may use the comp in my favor from a propaganda perspective with the seller, but I know it's not a real number. Because it's a family transfer that doesn't have a lot of stuff to it. But yeah, I'm going to absolutely use both public record and MLS comparable sales. So, and it's a great question, and you really need to focus on, when you look at all this stuff, especially the public stuff, who's buying it and who's selling it and why they're doing what they're doing. So you really have to look at the ownership. Speaking of ownership, not part of this question, but I just thought about it. I wanted to bring this one in. If you're in a neighborhood, say you got 200 houses around you. If the same buyer and the same seller has bought and sold 3 houses within that 200 house area, be very conscientious of buying, because they're setting the price. So what happens is an investor will go into an area. This is going to be a hard stretch for some of us. And they're going to buy a house. And then they're going to sell the house. And the more houses they sell, the more they're dictating the value of the property. Yes, we all know that buyers are who sets the value. However, if a single seller is doing a lot of the production in that neighborhood, well, they can fix the price that the buyer pays, and it may appear as though the houses are selling for more than they're worth. And in fact, they probably are. So you got to really be conscientious when you see the same buyer and the same seller doing multiple things. Which is why, by the way, I never buy a house in a subdivision that's not completed. Keep in mind, subdivisions are just investors. They're just contractors/investors. That's all they are. And if you buy a house, way off topic, I apologize, guys. If you buy a house in a subdivision and the subdivision isn't built out, and you think you have it priced right, and then all of a sudden that stock market contractor, the ones we're talking about, the stock market big developers that go in and build these tract houses, they can lower their value in a heartbeat. Maybe they didn't meet their numbers for the quarter and they just want to, dump on that neighborhood. So they're going to lower their values $15,000, $20,000, $25,000. And here you sit, you just bought a house. And now it's $25,000 cheaper because some builder, he wanted to finish out the lots. He wanted to sell the remaining lots at a discount with houses on them. That's why you never buy it. You never do it. Don't ever do it. Don't ever do it. Okay? Question number 4. I'm getting my real estate license soon, and I have a question. If I'm unsuccessful in buying a house from my direct mail program at a 65 to 70% discount from a homeowner, is it a conflict of interest to then say, okay, if we cannot agree on a price, would you then list it with me as a realtor? No, that's not a conflict of interest as long as you disclose. Heck, great business model. There are people out there, realtors, that say, if I can't sell your house, I'll buy it. So I'll sell your house in 60 days or less. If I don't sell it, I'll buy it for this predetermined amount of money. Now, I'm just wondering out loud, if I'm a realtor and I tell someone, well, their house is worth 100 cents on the dollar, and I'm going to make 6% of that if I sell it. But if I don't sell it, I'll give you 70 cents on the dollar and not collect my 7%. I'm just wondering how hard they try to sell at 100%. Because at that point, they're only making 6%. But if it magically doesn't sell, not saying anybody would do this, but there may be conflict there if someone didn't try so hard to sell, but in fact, bought them at a discount. But let's say, I'm not saying that happens. Tough thing if it does. Wonder what would happen with the realtor then. But there are a lot of realtors that have those programs, and there's nothing wrong with it. It's hard for me as a broker to wear both hats. So if I go out to a seller and I say, hey, I want to give you 60 cents on the dollar, and they say no. And I say, are you sure? And they say, yep. Then I got to turn my baseball cap, turn it around, and I go, but how about if I try to get you 100 cents on the dollar? No, because it's ruined. I can't wear two hats. And one of the biggest things is I don't know when to give up as an investor, because I'm just this guerrilla investor. I'm hammering and hammering them and hammering them. When do you stop trying to buy a house and just, put your tail between your legs and go, oh, well, can I list it? When do you do that? I don't know. It's like people ask me all the time, says, well, how do you buy so many houses subject to? Because that's how you buy them. You buy them because that's how you buy houses. If you go in there with the attitude, well, I can buy them any way I want. I can list it if I don't buy it. I can lease option it if I can't list it. If you go in there with all those options, well, what are you? You're a chameleon. I want to be a guerrilla investor that buys houses at 60, 70 cents on the dollar and wholesale those things, make massive amounts of money, and fall for it. I do not want to be a broker. I am a broker, but I don't want to be a broker for hire. And I certainly want to have a business model that I stick to. Boy, I'm getting off track today. I apologize, guys. Question number 5. I'm from New York. And in my county, when you go down to the clerk's office to pull probate cases, most of the time you'll see the administrator or voluntary administrator's phone number on file. I wanted to know if it's best to call or send a piece of mail to them first. Well, really depends on what your communication skills are. Because you're liable to sound like one of those ambulance chasers. No pun intended. If you have horrible communication skills. Which is why, if you talk to a lot of probate people, you'll find that they are going to tell you that in between 6, 9, 12 months of a probate is when the communication starts, because the grieving period is so unsettling. And we've got to get over the grieving period before we can actually have some intelligent communication. Other than that, you're just going to be like a vulture. And boy, calling them, boy, you better be really good on the phone. And even as good as you may be, you have to have thick skin, because they're going Some of those folks that's all they're going to see in you. And I think I would rather send them something and then maybe call them at maybe 6 months, 9 months, 12 months. Call them once a month between 6 and 12. But I'm not going to call them, Grandma just died. Here, heard Grandma just died. I'd like to see if you wanted to sell her house. What's that going to sound like? I don't think we should be doing stuff like that. That wouldn't be for me. Just because you can doesn't mean you should. And that's probably a big lesson in people's lives that they need to learn really well, is just because you can doesn't mean you should. I'm going to talk at the end of this podcast a little bit about my coaching. I've been having too many people ask me to talk about it, and I don't like doing it, but I almost think it's appropriate now since I've had too many people ask me. Let me tell you a little bit about my coaching program. It's a year-long program. It's a one-on-one, so you get to talk to me way too much, and I'm not as funny all the time. Sometimes I think I'm much more funny than I am, and as long as you laugh with me or at me, it's okay, because I think you're laughing with me instead of at me. We talk weekly, and you set your schedule, and we talk real estate. And I have a series of 8 chapters of what we're going to go through, from setting up your business to marketing, lead generation, lead capture, lead fulfillment, lead analysis, all the way through systemization. I think that's important, doing things on purpose. Systemization is so incredibly important to any business, but especially a real estate investment business where you have maybe another job that you don't like so much that you want to get rid of. How can you get rid of that job until you have systems in place that you can predict the income in which you're going to need to replace the income that you're making now? And we talk a lot about communication with sellers, what to say to them, how to say it. We use embedded commands and mimicking and pacing and positive negative reinforcements and neurolinguistics. That stuff's real important. I think a lot of us think, well, I know how to speak. I can just talk to somebody. That's true. That's true. A lot of us know how to talk to people. But do we know how to negotiate with people? Do we know how to get the person to own our idea as if it were their own? Because it's much easier for me to agree with me when it comes from the seller than it is for the seller to agree with me when it comes from me. What I mean by that is, when I present the reason my offer is legitimate and correct for the seller, in a way, the seller can now own the concept. Not so much own it, but now it's theirs. It was their idea. And they give me the price that they'll sell it to me for. It's so much easier to agree at that point for everybody. But if I walked into a house and I'd say, chart says 70% times this number, minus this number, I can give you X dollars. They're going to ask you to leave on a lot of occasions. Well, coaching program is all about understanding your market, doing something to that market that causes the phone to say hello. At that point, we have to have dialogue on purpose that we're talking to the seller and what to say. And then we go out there, knock on the door, and step back and look up the street and say, thank you for inviting me out to buy your house today, and get a contract signed. Being able to explain a 9-page contract that actually says that if you back out of this thing, you're going to owe me 25% of the contract price, $50,000, whichever is greater. We have to be able to understand those things and explain them. So my coaching program is really grassroots. It's like, I'm going to take you from wherever you are, whether you're seasoned, I've bought as many houses as you have, Mike, to I've never bought a house in my life. And I'm going to take you down a path to systemizing your business and doing things on purpose, and forming a dialogue that's going to change the rest of your life. When you understand and go through my program, you'll understand the idea of communication, because communication is not two people talking. It is two people listening. And, I'm going to teach you that. This is my little commercial on my coaching program. But we're going to learn sub 2. We're going to learn seller financing, option financing. We'll talk a little bit about lease option and sub 2 resale. Ways to magnify and maximize all the opportunity that's out there. I think that every phone call is an opportunity as long as you know how to do it. And the key component is to be able to see it, as disguised as it is. It's so camouflaged. Real estate, some of these opportunities are so camouflaged that they just don't, they're not like Horseshack that raises their hand, although that's who we're looking for. Some of them are so quiet and passive that we really have to understand what we're talking about and why the seller needs to sell and how we can solve those problems and how we turn what looks like some awful opportunity into a gold mine. And we do that fairly, morally, and ethically, and legally. So that's the program. I mean, if you want to learn Sub 2, seller financing, negotiation, the power of conversation, if you want to learn how to market and do it in a way that you'll never have to worry about marketing again, probably give me a call. I mean, if you want to learn how to systemize your business so you can go from the technician into the manager into the entrepreneur and never have to look back, give me a call. If you're afraid to fail, give me a call, because you won't. You know, I'm so afraid to fail that I succeed. I just grab it. I grab success. I look at an idea and opportunity and I say, what am I going to do to make it successful? Because I know success follows me. I believe in abundance and prosperity, so I know success follows me. And it'll follow you too. Just have to get in the program. We're going to do things that are uncomfortable and very comfortable. We're going to do things that I do. I will never ask you to do something that I haven't done. I'll never ask you to belittle yourself or to belittle anybody else. I'm going to ask you to become a real estate investor, a strong one that is passionate about it, one that helps people that don't even need to have a house to sell. Because I think ultimately that's our goal. It's to take ourselves from the money that we make on a daily basis and give that money to somebody that needs it more than we do. We're not going to give it all away. There's going to be a day in your life, if I have the opportunity to change, give you that paradigm shift, that you're going to go through and you're going to say, you know what, I don't have any bills to pay anymore. What's that feel like? That feels absolutely good. When everything gets, all those credit cards, all that debt, everything gets paid off. And then you still have money left over. What do you do then? You spend it a little bit, you play with it a little bit, then what? You know, you can only go on so many vacations before all of a sudden the vacation is not as important as helping someone that needs the money more than we do. And then that's a true real estate investor to me. Someone who has the ability to earn unlimited wealth. They're responsible to that wealth. And then they take some of that wealth and become more responsible with it. But that's just who I am. It's been fun, guys. Sorry for the commercial at the end. And until tomorrow, have a great day. Bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.